going on, YouTube? Hope you guys all had a great weekend. I hope you've all been able to make some money with these watch lists. I don't want to waste too much of your time with today's introduction, so let's just go ahead and get started with this week's watch list. So, the first name that we are going to be reviewing today is RR. I believe it's Rich Tech Robotics. This one is pretty straightforward, and again, as you guys know, a lot of my watch lists are all very repetitive in terms of how tickers, how these companies are developing from a structural standpoint. And I talk about this all the time to where at this point, a lot of this should be very repetitive to where you see it and you're like, oh, I know why AB likes this. Oh, that's I. And so what I'm doing here is I'm taking into account our expansion low or our higher low to our expansion higher high. So this is our impulse move into new higher highs relative to this last one here, correct? And so what I like about this is the confluence that is now existing within our potential higher low. So when I take my expansion, I annotate my Fibonacci's, right? I take my swing low to swing high in respect to the structure, right? Higher low, higher high. So that is where I would anchor my Fibonacci's. And then what I like about how price retraces, remember I talk about this all the time, is I like to see that staircase compression where price is kind of just absorbed. You're not really getting an aggressive breakdown that invalidates the structure. More so, you're getting a very nice systematic staircase. Remember, a staircase is easier to run up than a steep hill, right? So in this scenario, we are coming back into that designated higher low, that point of interest, which also has confluence with a previous breaker, and you have a really nice inefficiency here, your daily FEG that did get filled. And one thing that I like to talk about is when we enter these point of interest that are potentially our higher lows or lower highs of the given trend, how does price deliver out? And so you can see here we push up, fail to really break above a previous little lower time frame SR, and then break down to fill the gap, coming down to test the 0.75, and then you get followed by a nice day continuation up, followed by a gap up that held nearly full body. So now we got a close right back above the area where we last failed. So that is really important to me because not only is it paired with a gap up, it's now paired with displacement. This on a lower time frame is what I've been talking a lot about, and I will be making a video about this, is my broadening formation inversion gaps. So to cover that really quickly is whenever you have, so here's your broadening low, here's your broadening low, here's your broadening low, correct? But what matters is how price delivers after that. And so in this scenario here, when we have this broadening low paired with your higher time frame confluence, look at what price does. It's a gap down into new broadening lows on your lower time frame that is then recovered with aggressive price action followed by a gap up. So this area here of inversion has now been flipped, which is why I call them broadening formation inversion gaps, because two things have to take place. You have to aggressively deliver into new broadening lows. So in this case, we had a gap down with a full body candle close into that gap. And then the second thing that needs to happen is, can you invert that previous displacement with new displacement that counters the previous move? So in this scenario, I would like to see something like, so on a lower time frame, you have this, and then you get aggressive displacement that pretty much recovers the previous move. So you want to overlap. So this displacement needs to be overlapped. But you're probably like, oh, that's just a BPR or a CISD. Sure, they're very similar. But what I'm looking for specifically is, did we take new lows aggressively that get almost immediately countered? So that's the difference between the broadening formation inversion gaps that I've been using. I'm going to make a video of this. It'll be a simple like 5-minute video, but for the most part, that's why I really like this, because look at what we flipped and now we got a nice close. So like now if RR gives any kind of minimal dip on this 4-hour, it's buyable. And I'm pretty much looking for this kind of compression to, break out here a little bit. And I would like to see if this breakout has legs. I would like to see 7.8, 8.4, 9.07. And I spent a little bit more time on this than I wanted to, but a lot of the other setups are pretty straightforward. Something I covered in the 8x Trade Discords. By the way, if you still are not aware, 8x Trades is my home server, and I do live trading there every single day. Classes once or twice a week, sometimes even during the live trading. I share my screen, I talk about setups, I answer questions all day long. And I also have 3 sets of channels. I have a small account alert channel, my regular alert channel, and then an updates channel where I post a bunch of ideas throughout the day. But a lot of my activity is spent in 8x. So if you ever really want to learn from me hands-on with like one-on-one experience, come join the team. But anyways, back to this. And the reason I brought up 8x is because I shared this specific chart in 8x. So if you're like, wait, I didn't see that, that's probably why. So one thing I talked about in 8x is the development of XLF. So we come into a really nice higher time frame POI here, a very nice gap, which was also our established previous week low. But then look at what price does. We push up, we reject, right, where you're supposed to. So lower low, lower high, lower low, lower high. But wait, we now establish a higher low. And something I talk about a lot is when you can identify an inverse head and shoulders at the bottom of the range or broadening range, which this is that, you can potentially start to develop into your buy side of the curve. So when you are in a sell program, you're hunting only sell side, right? Each previous low is getting taken. But when you start to develop into a new trend and you go into the buy side of the curve, you're looking for the buy stops, right? Each previous high. And so in this scenario, we did just that. And I talked about, hey, we're coming into a gap. We're showing some potential exhaustion because of the wicks, the repetitive wicks and no follow through. We have a gap. We have a potential higher low to establish. And in inverse head and shoulders, can we get delivery back up? So you can see we gap up into new 4-hour highs. So if this area doesn't show any continuation, I believe we are setting up for a potential new higher low that can take us into previous week high 54, 54.5. So XLF is looking really, really good. And if we can get an early retracement, I want to be a buyer to continue the trend because we are in GS, WFC, and to kind of go off of that, it's the same thing with GS. This is a beautiful freaking chart. Look at how price exhausts into a really nice point of interest, right? You have your 4-hour inefficiency, you exhaust at the lows, followed by an immediate recovery. Remember, if you don't get initial display, if you get displacement, and then after that things start to slow down, it's important to pay attention. Candle structure, candle development is the context you're building for narrative of, wait, why is price changing here? Why are we wicking? Right? So you're coming into a large point of interest, right? Sweep, exhaustion lows, that then gets recovered by a gap up. And now you have all of this LRLR to take out because of look at how price is absorbed. Remember, I talked about the staircase analogy. So GS is the same thing. Anything in between here now, in my opinion, is buyable. Any 760, 775, I think is all buyable. If you don't get immediate continuation, then you redeliver and then trade back up into 800 plus. Same for WFC. Really nice compression taking on here at previous all-time highs. I would like to see this trade out into the 89.90s. Next up on the list is Bull. And the reason I'm bringing this up is we do have some really nice call flow, and we also have some things to pay attention to here on the lower time frames and on the higher. So the daily did come into a really nice refined demand, which is also a order block on the higher time frames. Now the reason I'm bringing this up is because it is potentially showing and demonstrating signs of, I'll give you 5 seconds to see if you can think about what I'm about to say. That's right. If you guessed broadening formation inversion gaps, you are on the money. So let's zoom into the 4-hour now, because look at what prices did. So lower low, lower high, aggressively displaced into new broadenings, but then look at the immediate reaction after. You immediately revert back to the upside. And you did it with a few gaps. So when I go back into the daily, not only do you have a gap up, now you have something to work with here. So if Bull can maintain the integrity of this move and not get any daily closes under 10.9, we can now use this to our advantage and potentially use this as a breakaway gap, right? Come back, use that breakaway gap as support to then find buyers to reestablish a potentially new trend. And when I go into the 4 hour, we also have a potential PO3 demonstrating here, right? So if this PO3 breaks out, again, can we use this breakaway gap to potentially trade back up into 13 plus? That's kind of what I'm looking at here. And you see how I pair all these timeframes together, right? And like, again, I'm not really using any indicators. The only thing I'm using is just marking out my previous lows and highs. And after that, it's just price. Price development and structure is all I'm using. And then confluences of how price is delivering in certain places. What is price doing? Right? Remember, you always want to ask yourself, what is price doing? How did price get here? And what is price likely to do based off of the previous context of its development? And so bull is definitely setting up because we do have that early broadening formation inversion gap that I've been talking so much about. And I promise that video will come out. I promise it's in queue. But you have some really good signs here. With a breakaway gap, can we get that PO3 development and potentially trade up into 13 plus? I really like this for the risk reward. The only thing is, I know a lot of people on X have been talking about this over the weekend, so it could, you know, it could be a little crowded trade. But I digress. One I really like here is Adobe. And the reason I'm liking Adobe is because we are threatening a potential outside month. So what that means is, from a standpoint here, let's say this candle here was our previous monthly candle, right? Now what we do is Adobe managed to take out previous month low, right? And we were delivering down. This, let's just say for application's sake, this was a red candle, full body candle closed down. We took out previous month low, but now we're recovering. And instead of it being that red candle, now we're a green candle with a really nice wick, right? So now we look something like this. Sorry, I'm just doodling. So now we look something like this. We took out that previous month low, and now we're aggressively pushing back to the upside. And so what this is threatening now is, because we swept a monthly low, we are now threatening a nice broadening here on the higher time frames, meaning Adobe has the potential to now expand into the previous month high due to what we just did to previous month low. So we have a higher time frame broadening here developing that could end up playing in our favor. And I really like this because, again, this is basically a big old PO3. And again, that broadening, so you can even draw it out, blah, blah, blah. All right, you got the broadening here. And so if Adobe can manage to maintain its structure, I'd say above, I mean, even if you get a pullback, you have this now to work off of. But I just don't know if you get the full retracement because of how price is developing right now, right? You could, like, if you don't just base here, you could go into like a small little staircase driver that then breaks out, which I would be very, very interested in if we do get that, because then we probably rip into earnings, which, I mean, I think it could be very possible. And if that's not the case, right, you probably just develop here and base above. But the target is 371 into end of this week. And if that doesn't happen, then I would like redelivery that establishes a new higher low and continues into a new trend into earnings. So this one's either going to be good for a nice weekly trade or a nice swing long into earnings. So definitely keeping an eye on this one in terms of how we develop above the 340 and 350 area. It's super, super pretty chart. Another one I really like is ASTS, ticker AST Space Mobile. This one is really clean, and this one's going to be more of a patience trade if I get what I want. If not, then no trade. Now, you can also apply your fibs based off of the lower time frame. I did the higher time frame, but you have to understand two things here, right? You have structure within structure. You have your full weekly expansion, and then you have your lower time frame expansion because price did retrace and pull back into new highs. So based off of how you're looking at this or your outlook, right, you do have a potential entry here because, again, when I say it's structure within structure, you are at the point 0.5. So the question is, are you willing to build this out? And I think for something like this, it's always better to get time, like 4 or 5 months out. And I think you can get really rewarded with this. So if this is going to be the higher low here, I mean, you have opportunity to build between 70 and I would say 55. You have about a $25 window to potentially establish a nice higher low pre-ER or post-ER, doesn't really matter, and potentially give you a very strong expansion towards the end of the year. So a $25 window for a 40, 50 plus scenario. Because if this is going to be the higher low, we can always interpret with our extensions. So like, look, if that's going to be the target, oh wait, sorry, this is the wrong one. There you go. If this is going to be where that higher low gets established, look at what our targets become, 120 and 140. So this one's going to be a patience trade, but I will like to start buying some potential leaps out, maybe a year out, and build it within this range if we reject the gap. Now, if we get a strong push through 80, I do believe that this higher low has been properly established, and I think you can probably just run straight forward into new highs from here. So it really just depends on how price delivers out of this gap. If not, I expect one more higher low. I've been talking about this one for a while. Path. It is one of my favorite charts, but it's also now being spammed on Twitter. But again, a lot of the times these overcrowded names tend to still run. If a good setup is a good setup, who cares how many people are talking about it? So what I like about this one is it is creating really nice external accumulation. And this is your Wyckoff model, right? You get the spring, breakout, exhaustion lows at your nice inefficiency, which does establish your previous month low, and then you get the expansion into new highs. So you finally broke out of that 1 year and a half base, and now you're compressing price really nicely here on your externals. Whether or not you deliver higher or you get one more higher low, I think anything between 16 and high 12s is all a buy for a 1 to 2 year outlook because we're looking for 20 plus here. And I think the way price is developing, it is looking super clean. You also have to interpret how the weekly is developing, right? This is the first weekly break above the 15 and 16 mark since the breakdown of 2024. So this entire base has now shown structural evidence that buyers are supporting from a higher time frame standpoint. Whether or not you deliver down and truly establish a higher low, which I would love a bunch of buys here, but it doesn't have to happen. Right now you have a failed weekly, a 1-2 down rev known as strats. So if you get that push up, you get a nice PMG that probably triggers you straight up into the 20. So this can happen relatively quick within the short term, but it is a very, very beautiful setup. And from a lower time frame perspective, you also have that broadening inversion that I like to talk about. You see how you push up, aggressively displacing into lows, and then look at the delivery afterwards. Almost a really nice, clean V shape. And you can even go and assess this on the 4 hour, right? Gap down that pushes you into new lows relative to this, and then look at how price recovers. So anything above 15.7 from a lower time frame perspective could be the buy that triggers this up even higher. If you don't get a full delivery down into those high 13s, which I'm not sure if we do get. So position accordingly. CRML. This one is pretty clean, pretty straightforward chart. What I'm looking for here is, can we establish a higher low off of this aggressive break? Price has finally given us some kind of retracement. There is supportive gaps and a really nice inefficiency here that is getting rebalanced. So if this is going to act as the higher low, can we get a potential breakout? So expansion, come back into fair value. Can we start to turn things around and establish that higher low? Next one is grab. This one is pretty clean because it is incorporating not only your broadening formation inversion gap, it's also incorporating a breaker, it's also incorporating a fair value gap rebalance, and you're coming into discount. So you're getting 4 pieces of evidence that buyers are here. And you have that really nice compression. If price is going to work, this breakout, which has held since 2024, just finally got retested. Something important to note, this massive breaker that has prevented grab since 2024 up until last month to break out finally got a retest. So if this is going to be valid, now you got 2-day displacement, you got outside 3-day, right? You got a rev on the week, which is very, very important. Again, it's very similar to path, right? Look at the weekly development. One entire year plus. Now you finally got the flip. So much pieces of confluence on this. I would assume you take out those relative equal highs at 6.6. So this is looking phenomenal, y'all. And you got that delivery out. Gap up, gap up. Can you hold it now? You do have earnings coming up within 2 weeks, but if this trades out, you should get a nice run into those high sixes again. Tesla, very clean range trade. If this range here does not hold, I would like a liquidity sweep to break out. But my targets overall, regardless of if this holds or not, because you do have some good development on the hourlies, but if you don't go for the sweep into the gap and take out all those external lows, then I believe, regardless if you break down or not, I think Tesla into January, February is going to hit 474, 489, 504, and potentially 520. Those are my targets for Tesla, regardless of what it does from here. You either hold this internal 4 hour and break out, or you go for a nice external range sweep and then go crazy. IoT is more on the speculative side. I like the fact that you had a really nice breakdown. So consolidation, you had your accumulation, manipulation, followed by a really nice gap up, which was your earnings, and you kind of have just been flagging above your post earnings power gap. So you have that earnings catalyst that's been holding ever since its last earnings. So the way this is developing from a higher time frame perspective, this could be this, right? And you know what I say about inverse head and shoulders. So on a higher time frame, is this going to be where IoT finally changes it up and you get some constructive buy model, which then takes us and delivers price up into that gap? This is more of a speculative play because earnings is on the horizon, but I do really like it a lot. Jets. Jets weekly structure. This one's very simple. Again, I'm going to draw it out for you. Higher low, higher high, higher low, higher high, higher low. So when I anchor this out, we have our higher low to higher high, which is here, higher low to higher high. Price compresses. That staircase analogy that I like. This has been literally compressing for what? 1, 2, 3, 4, 5, 6, 6 weeks. 3-1 that showed some signs of life finally. So our airline's potentially going to get some kind of catalyst. And I like the strat development. Outside 3 followed by a 1 that actually gets a decent weekly close relative to the last two. And you are at that higher low that did rebalance this aggressive candle back in August. And so if this is going to break out, you have a really nice PMG trigger here technically because you have this clean LRLR to run through. So as long as Jets can stay above 24, I do think you start to target 27 and 28. So keep an eye on Jets. DELL would be more of a momentum trade. We are in a swing trade for this one that is already up 1x, and I would like to just see momentum, right? You get this really nice external buildup that comes into our discounted zone, also per the breaker, and you get that aggression break. So price delivered out of our discounted zone very nicely, which maintains the integrity of the structure. You had a pretty, I would say, pretty decent week, daily and weekly close. I do believe you went outside week as well. So you went 1-3 on strat with a gap. So a lot of this is supportive. 151, 157 is now supportive for buyers. If this area manages to hold, I'm still looking for 167, 176, and potentially 190 pre-ER. So make sure you hold those runners. NVIDIA is also very similar to DELL. I like the 4-hour structure here. Higher low, higher high. You kind of got some manipulation. You got the little turtle poke out, manages to climb back up. Now you have a gap that's trying to fill another gap. So price could get stuck in between the zone, but due to how price delivered and did not fully break down lower, I would anticipate this gap manages to hold and NVIDIA can target 191, 193, and 197. The integrity of the structure looks good and you have supportive gaps now to kind of keep you there. And finally, one of my more favorite charts is Humana, ticker HUM. This one is just taking into account what price could potentially do. It's more of a speculative play that's being derived a little bit off of structure. So once again, we have our weekly low, we have our weekly high. When I take my Fibonacci's to identify where price could retrace to establish a potential, trend, we do get a really nice higher low, and look at how price delivers. Now what we're getting some external compression. So you can see price is just kind of stuck. But a lot of the times when you have this kind of price action, it tends to trade out the same way it traded in. I know we have earnings coming up, but using that reference and what we know of price action, what was price doing before it got here? You broke down, traded up. So you went down, up, and now you're kind of compressing. If you're going to trade out the same way you traded in, down, up, you will trade down, up, right? So that's a cool little um, tidbit for you to know in the future is whenever you see these kind of like wedges or compressions, ask yourself, how did price get here? Because it's likely to trade out the same way it traded in. Down, up, started to compress. If you're going to mimic it, you're going to get the same kind of breakout. So if I draw this out like this, if it does break out, right, has the potential to do 320, 340, even higher. Really depends on ER. So that's why I'm saying it's more of a speculative play based off of like the compression. But if it were to play out the way I see it, you get that nice higher low compression build out that then breaks higher. So Humana is one of my more favorite speculative plays. And this week's watch list was a little bit shorter, but hopefully you still learned something. That's pretty much it. And as always, I'm doing these videos to show you how I look at things. And a lot of it, again, is always repetitive. So you might get annoyed with me by the end of all this if you aren't already. Man, this is the same stuff over and over again. But it should be boring because that's when you know it's working. So as always, remember I'm trying to get my educational series out. And I can only do that when I reach 5,000 subscribers. I would like to get a little bit back in order to give to you everything I've ever learned, everything for free. So please leave a like, some comments, share my page with all your friends and family, let them know about AB trades, and I will see you all next week. See ya.